Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello, everyone. Welcome to Capital Good Night. Today is Thursday, March 26th. I'm analyst Jang Jita. Remember to like, subscribe, and share during the session. If you have any investment questions, feel free to leave a comment. If I can't answer them today, I'll follow up with everyone one by one in tomorrow's class. It's already Thursday, and after tomorrow, we'll be heading into the weekend. This week, many events have been related to the geopolitical risks between the U.S. and Iran. As usual, today I'll also talk about the current status of the U.S.-Iran conflict. Is there a chance for the talks they mentioned might happen this weekend? Looking at the 5 major conditions and 15 points of consensus, we can start to see some clues. It's not that they don't want to talk, but there are many obstacles making it difficult. I'll explain those obstacles today. Good evening, everyone. Good evening, Hui Huan Huan and AIR. Good evening. Hello, Gui Ye and Lik Xiaobai, Yun Lun, CCCPS, and LLSF. Good evening to the staff as well. Just now, Lik Xiaobai said he went for a run today, and I just happened to... I saw some news in the last couple of days. For those who like marathons, registration might be closed. It seems there's a marathon on April 26th in Neiwan, Hsinchu, near the Neiwan Old Street. There's a marathon called the Provincial Highway 3 Love of Tongue Blossoms Marathon. They have half marathons, full marathons, and categories for youth and seniors. It should be quite nice. I've never run a marathon myself, but since Lik Xiaobai mentioned he's running for his health, I remembered that news. If you've signed up, you should go for it. Regardless, I think balancing health and life is important. So while you're watching Capital Good Night before the US market opens, take notes on the important info and plan your trades. Then, after the market closes, remember to let your mind and body relax. Whether it's running, eating, or enjoying good food, keep your life balanced. Okay, let's look at today's investment highlights. Oh, good evening, Kokoli and Michelin. First, the US and Iran are challenging each other. Watch out for forest debris. Both sides are shouting, challenging, and provoking each other. To what extent? I'll explain shortly. Besides the US-Iran geopolitical risk, another market focus people are ignoring is the financial credit cockroach crisis. What does this have to do with forest debris? A lot, actually. This concept relates to the physics of forest debris mentioned by the former CEO of Goldman Sachs. I'll explain later why it's relevant to financial credit. As this forest debris piles up, it creates a crisis that everyone should take seriously. Besides geopolitical risks, you must pay attention to forest debris. On the industry side, even CPUs are seeing price hikes. Previously, high-end components like GPUs and graphics processors from companies like NVIDIA and AMD have been selling incredibly well with high market shares. Prices keep soaring for models like the GB100 and GB200 and soon the Rubin series. So many series are selling incredibly well. Besides GPUs, there's now news of a price hike for CPUs as well. And what's behind the CPU price surge? It's also linked to the development of AI. You might ask, teacher, how are CPUs related to AI? Well, they are. And why is this AI development causing CPU prices to rise? Just like the previous massive price hikes for DRAM, DDR4, and DDR5, it's because AI development is squeezing both the demand and supply in these industries. Now, CPUs are facing the same situation. Specifically, 2 companies saw significant gains yesterday, Intel and AMD. So how should we view the outlook? We need to watch them closely. Also, Google. Google's paper today is a big deal. They released a research paper that's closely tied to Micron. It suggests that AI development could even reduce the demand for high-end memory like Micron's. What exactly did Google say, and why did Micron's stock plummet yesterday? I'll break it all down in tonight's show. All right, good evening, everyone. Good evening, Linda. And who is this HAO, how young? Good evening. There might be large-scale military actions over the weekend in the US. Should we go to cash on Friday? Can we keep commodity stocks? If you're worried, just reduce your position. It's that simple. We don't know if there will be major military drills on Friday. I'll discuss geopolitical risks later and talk about the probabilities and what might happen. If you're anxious, whether it's stocks, commodity futures, or anything else, just cut back. Reduce your holdings and keep more cash. We never know what Trump has up his sleeve, and you don't know what Iran is doing. Behind the scenes, we just don't know. So if you're scared, just lighten your positions. Cash is king for now. Okay, good evening, S.Y. Lu, and good evening to Sandra Chen as well. All right, let's take a look. Besides today's investment research, there's important economic data coming at 8:30 tonight. The U.S. weekly initial and continuing jobless claims. This is high-frequency data released every week. For initial claims, the previous figure was 205,000, with an estimate of 210,000. Continuing claims were 1.857 million, with an estimate of 1.851 million. They're pretty much in line, so the impact should be minimal, regardless of whether tonight's numbers are high or low. The market's focus will likely be on the US-Iran conflict. What will Trump say next? Will Iran be willing to compromise or negotiate? I'm neutral on tonight's jobless claims. High or low, I don't think they'll have a massive impact on the market. But looking ahead to next week, we have the ADP private payrolls and the Labor Department's non-farm payrolls, which are much more significant. ADP and non-farm payrolls are monthly reports from the Labor Department and carry more weight, so we'll track those initial claims together when they come out at 8:30. You're welcome, HAO. Good evening, little donkey. What's the outlook for Nanya Technology and Winbond? Regarding Nanya Tech, there was news today. Actually, we mentioned it on yesterday's show. It was reported that a subsidiary of Hynix, Cisco, and companies like Kioxia, the hard drive makers, Kioxia Technology have also invested. What are we investing in? Nanya Tech's private equity fund, over 70 billion yuan, with a share price of either $232 or $239. This is a huge positive, a strategic alliance. But today, the stock hit the limit up, then opened high and closed low, dropping sharply. So pay attention over the next few days, because when good news comes out, volatility is inevitable. If you hold DRAM or memory stocks, whether in Taiwan or the US, remember, don't chase high volume. If you see high volume with a long black candle, no matter the stock, sell first and ask questions later. Let me say it again. Whether it's US or Taiwan stocks, any memory stock has its theme and strong fundamentals. Demand is rising, DDR4 and DDR5 are both rising quickly, and DDR4 prices have even surpassed DDR5. It's pretty scary. So right now, international quotes are still very strong, but the stock price might see a lot of good news is exhausted or good news where people want to run. So just remember, when high level, high volume with a long black candle appears, remember to get out first. Later, if there's consolidation and things get more stable after volatility, you can buy back, that's fine. If it falls below the quarterly moving average, whether it's for Taiwan or US stocks like the 50-day or 60 MA, reduce your position by some. You don't have to sell everything, just reduce your position a bit. To make yourself a bit more secure in terms of position management, don't go all in. Don't go all in. This is just a simple suggestion for everyone. Okay, and next, besides this economic data, let's look at the officials part. Keep an eye on Trump. He was originally scheduled to visit China at the end of March, but because of what he said about the US-Iran conflict, it was postponed to May 14th to May 15th. Now, this date is very interesting. Why didn't he postpone it to mid-April or the end of April, but instead postpone it to May 14th or 15th? What does that mean? It means there's a very, very high probability that he hopes before May 14th or 15th to at least bring this US-Iran conflict to a close, at least to a close. And what does that mean? It means right now we're roughly, let's say it's the end of March. So if you let Trump keep fighting, how long will it last? Probably until before mid-May. There should be more and more signs of a ceasefire happening. So everyone keep this in mind, because after all, under the premise of visiting China, he doesn't want too much trouble. Although Iran is relatively friendly with China, actually Iran is friendly with many countries like China, Russia, and then like India, Bangladesh, and some countries that might be friendly, he would let these ships, tankers, pass through the Strait of Hormuz. And of course, China is one of them. So, do you think Trump would hope that before visiting China in mid-May, he would at least bring the U.S.-Iran conflict to a close? Otherwise, if he really visits, China, they'll definitely talk about things related to Iran, right? And you always need a relatively complete cleanup. So when you meet with Xi Jinping, it's less likely to be confrontational and easier to focus on what? Focus on the US China trade negotiations. It's less likely to cause complications or a bunch of other geopolitical risks. I think that's why he set the date for mid May. There might be clearer signs of a ceasefire before then. Also, lowering inflation is a huge incentive. Whether the election market and the economy will get positive feedback by the end of the year depends on if inflation can be lowered. So during the US Iran conflict, you can see things like the US releasing oil reserves and the Treasury and many other agencies taking steps to suppress crude oil prices. This includes the EPA, which said it would lift the summer ban on selling E15 blended gasoline. What's E15? Simply put, it's 15% ethanol and 85% regular gasoline mixed together. This helps save on costs. Now, it has its different pollution levels. In very hot weather, this 15% E15 blend might have higher evaporative emissions. That's why the EPA originally had restrictions. But now, because crude oil demand is being managed and crude supply is constrained while demand remains strong, with supply falling short, the EPA had to relax these sales restrictions, so E15 might be exempt this summer. They're also removing barriers for E10 sales. Regardless, they want to slow the rise in crude oil prices. This policy takes effect around May 1st. The market expects that if E15 can be sold, it might reduce US gas prices by how much per gallon? Not much, maybe 0.1 to 0.4 cents. It's very little. I recall US gas prices are hitting $3.80 or $3.90 a gallon, nearly $4, which is very high. It's almost a record high compared to this time last year. So it's a very high price. A 0.1 to 0.4 cent drop isn't much. It's a drop in the bucket, but every little bit helps. Trump basically wants to cool things down during the US-Iran conflict and lower gas prices. Otherwise, if prices keep rising, the Fed won't easily cut rates. If the Fed doesn't cut rates, the economy suffers, and consumer spending, corporate borrowing, and investment costs will all go up. That's bad for the stock market and the economy, which Trump doesn't want. So he's pushing for rate cuts and even actions to lower inflation. That's the gist of it. Okay, good evening, Hermes Shi. Good evening. Good night, Minion. Shendai Mini asks, is this a turning point in the Kondratiev wave? Do you mean a Fibonacci turning point, or are you talking about the Elliott wave turning point? Please be more specific so we can answer. Hello, Shendai Mini. Good evening, Shu Shu. The Taiwan stock market opens high and closes low every day. It's exciting, yeah? Remember, for both US and Taiwan stocks, if it opens high and surges, sell first. Don't chase a high opening. The market's been like this lately. We've talked about this volatile pattern for a while. Whenever there's a big surge, you sell, sell, sell. Take some profit. Then, when it crashes or drops sharply, you buy, buy, buy. Just catch this rhythm and go against the general market sentiment. Well, not exactly against it. Go against human nature. When it surges, don't chase it. Just sell. When it crashes, don't be afraid. Just buy. In a volatile market like this, big drops often hit lows and big surges hit highs. That's how it works. Stick to this principle. It's been true for Taiwan and US stocks lately. Don't do the opposite. If you see Taiwan stocks surge intraday or open high because of the US market, don't chase it. You might buy at the peak, so be very careful. Okay, Patrick Pro, right? Good evening. Now, let's talk about what the Goldman Sachs CEO mentioned, forest debris. This former Goldman CEO, Lloyd Blankfein, described something quite interesting. What did he say? He asked if anyone has seen those Discovery Channel shows or those, what are they? Plant or animal channels? Anyway, those kinds of shows. If you know about the wildfires in Australia or the ones in the US mountains, why do they happen? It's probably because it's too dry. Dry weather is one factor. Dryness alone doesn't always cause a wildfire. But if you have lightning or extremely dry conditions, a fire is more likely. However, for it to become a massive wildfire, other factors are involved. It's not just about lightning strikes. A tiny spark doesn't always set the whole mountain on fire. No, there's a major prerequisite. There must be enough fuel and kindling. What does that mean? Well, after winter, aren't there a lot of fallen leaves? Trees shed leaves, right? Dead branches and leaves fall. They slowly accumulate more and more. If there aren't any natural fires this year to clear out this debris and turn it into fertilizer, it just keeps building up year after year. The leaves pile up, right? And the nutrients keep accumulating. As they sit there, they can ferment, even producing things like methanol, ethanol, or other gases. Besides those chemical reactions, these piles of dead leaves just keep growing and growing. As they stack higher and higher, what happens? If there's no fire to clear them out, all that debris becomes highly flammable. So, what the former Goldman CEO meant is that if a forest has massive amounts of accumulated debris and there aren't frequent small fires to burn it off, after years of buildup, even a tiny spark can cause a massive explosion. The scale and duration of the fire would be enormous, turning a small spark into a raging inferno. That's the scale he's talking about. Applying this to today's credit market, he warned investors that many investors are constantly accumulating unsold private assets. They keep buying and buying. Many funds keep subscribing, buying more and more. He's noticed that some of these assets are of poor quality and likely overvalued. But because they're packaged well, investors, thinking the market is still great, keep buying and subscribing. In reality, some of these assets or companies have issues or are overvalued. Plus, the Fed's interest rates are currently at a peak. With interest rates at a plateau, corporate borrowing costs will rise accordingly. When corporate borrowing costs rise, what happens if one or several companies slowly run into cash flow problems? When they can't meet their immediate needs and can't rotate their funds, a sudden explosion or bankruptcy occurs. Then what? It becomes a spark that spreads everywhere. He says that in today's private equity and private asset credit market, the market faces this crisis. This situation is happening again. So just a tiny fuse could potentially trigger a large-scale, massive asset impairment. What does that mean? For example, if I'm an investor, I might buy into Company A or Company B, which are private equity funds for many small and medium enterprises. Why don't these SMEs go to a bank instead of issuing private equity funds or private credit? Because some banks might not want to lend to them. Or maybe they need money urgently, so these companies are willing to pay slightly higher interest than a bank loan to these private equity firms and investors. For those investors, in peaceful times, it doesn't matter. I can get interest income higher than bank rates, so investors are happy. And those borrowing SMEs are also happy because they're getting the loans they need. But if the turnover of funds becomes increasingly difficult, or if debt or costs get too high, or if the economy isn't as good as imagined and they can't expand capital expenditure anymore and things start to get stuck, then even high interest payments might not be enough to save them. Investors might notice something's wrong, like, wait, why are some investment banks starting to block my redemptions? Blocking redemptions from these private equity funds. Some companies might find issues with their issuances, or even face the possibility of bankruptcy. At that point, if one company blows up, there might be a second, then a third. As it all ferments and explodes, the entire credit fund market, regardless of whether you're a good or bad company, will just all collapse together. It's a bit like the subprime crisis back then. What was originally a simple black swan or a gray rhino event was left unaddressed and grew bigger and bigger until finally even the too big to fail banks all collapsed. Like Lehman Brothers, Merrill Lynch, and so many others, banks like ING and those insurers went under, right? After they collapsed, hundreds of billions of dollars just boom, vanished into thin air. That kind of situation can happen. So everyone should take what this former Goldman Sachs CEO said to heart, because he says the current private asset market is already in this state where the accumulated debris is just piling up more and more. Okay, so as for geopolitical risk, if geopolitical risks really start to cool down, don't be overly optimistic. It just means Trump isn't stirring things up and Iran is negotiating a bit better. Setting that aside just explains how the index went down and came back up. But once it's back, everyone needs to focus on what all these CEOs are saying, including Jamie Dimon of JP Morgan, the former Goldman CEO, and those from BlackRock, Barclays, and Blackstone Group. Many major banks like Morgan Stanley and JP Morgan have issued warnings about this. So it's not that it won't happen, it's just brewing. Everyone, keep that in mind. Methane, right? Okay, great. Thank you, William Huang. Good evening, Jeffrey. Okay, so if it tests the 5-day line and holds, it'll start moving up, right? Which stock are you referring to? Many stocks are relatively stronger if they hold at the 5-day line. Anyway, just remember what the former CEO of Goldman Sachs said. Now, the 10-year Treasury yield is holding at 4.5%, and the terminal rate has hit 3.7%. That's huge! Inflation keeps climbing, and oil prices and everything else are rising. So both yields and the terminal rate are surging, which affects the number of rate cuts. It's down to 0.3 times, meaning it looks like there might not be any rate cuts this year. It seems that way for now, but that's just the current sentiment. I'm telling you, the current mood suggests cuts are unlikely, but that doesn't mean things won't change after the US-Iran conflict. Could the number of rate cuts go from 0.3 back up to, say, 1.3? It's possible. We'll have to see the final economic data and how Fed officials adjust their stance. Okay, as for the US dollar index, it's up 0.1 today, staying above the 200-day moving average. Regarding geopolitical risks, let's do a quick follow-up and provide an update on the latest progress. Right now, the White House says they're sending signals for negotiations, but at the same time, they're increasing troops. They're negotiating while deploying paratroopers and Marines to the Middle East. By March 27th, tomorrow, everyone should be in position. In a way, it's a warning to Iran. If you don't negotiate in good faith, these paratroopers and Marines might just start seizing islands like your Karg Island. To handle it, it said the White House warned that if Iran doesn't accept the deal, Trump is ready to unleash hellfire. It sounds terrifying, like a major war is coming. This weekend, a ceasefire plan is expected to be discussed in Pakistan. Meanwhile, Israeli Prime Minister Netanyahu sets a strike hard over the next 48 hours against Iran's military industry. Hit their military facilities hard, because after 48 hours, it might turn into negotiations this weekend, and then you can't strike. Maybe there'll be peace talks and then combat stops. So the Israeli PM wants to strike as much as possible in the next 48 hours before the talks begin. And the Middle East mediator mentioned that Iran isn't actually as tough in private as they are in public. The chance of a deal is low, but he says it hasn't collapsed yet. As for the actual situation, I think it's a carrot and stick approach right now. We just have to wait and see. If you ask me how the talks will go this weekend, I honestly don't know. Well, even though the mediator says it's not that bad and they aren't that tough, that's just what he's saying. No one really knows. We'll just wait until the weekend to see how they negotiate. In short, the current market is tricky because there are so many variables. Since no one knows how the talks will go, you should hold more cash. Maybe you used to keep 20% in cash, but now, good evening, Amy and Anna. It might be better to keep 40 to 50% in cash. More cash means more safety. Never go all in. I know when people trade stocks, they love to go all in. Their hands get itchy, they can't control themselves, and they just have to do it. It's not just investors. Many people are like this, including my own family. Every time I talk to When I tell my parents not to go all in when buying stocks, I say they should scale in, take profits in stages, or set stop losses in increments, but they won't listen. They just won't accept it. I ask them why, because scaling in gives you much more flexibility. They tell me, you don't understand. If I buy stocks the way you say, layer by layer, one share at a time, scaling in slowly, it's just not satisfying. If I see a good price today, I can't help myself. I want to buy 5, 10 shares, or even $1 million worth right then. I don't want to drag it out. If I see a stock like TSMC and it looks great, I want to put $1 million in now. You want me to wait 3 days or wait for certain prices to buy again and again? I can't wait that long. I don't have all day for that. That's how they are. But in the end, the reality is that the market usually proves, well, it proves what? It proves that scaling into positions, taking profits in stages, and using incremental stop losses is actually safer. It really is safer. It's just that most people are in a hurry. They want to buy it all at once and be done with it. That's how it goes. But regardless, I'll keep urging everyone to maintain flexibility in their trading. That's the gist of it. Now, someone mentioned there's a market crash every year. True, every year has one. Last April, it was the trade war and prices plummeted. And this year, the conflict between the US and Iran, how long will it last? I honestly don't know. All right, moving on to Iran. Iran has proposed 5 major conditions. Regarding these 5 conditions, if you've been following the news since this morning, you're probably familiar with them by now. So, as for these 5 conditions, how hard are they to meet? I don't think it'll be too difficult. Maybe a third are achievable, and another third might be negotiable. The 5 conditions state that the US and Israel must stop aggression and assassinations. This is actually easy to do. If there's a ceasefire, those things stop. If you meet the US demands to eliminate nuclear weapons and limit missile development, then the US and Israel will stop their aggression. So I think the first condition isn't hard if they can just agree. The second is ensuring war doesn't happen again. If the first condition is met, no more nukes and no more unchecked missile development, then the US and Israel won't attack. If they don't attack, then war is unlikely to happen. So the second condition isn't hard either. They're linked. Once one is done, the next follows. The third is reparations. I think the chance of reparations is 0. The probability is very low. Asking the US and Israel to pay war reparations based on the damage done is almost completely impossible. It would be like the US and Israel admitting they were wrong. Furthermore, all fronts and related Iranian groups must end the war. Again, it's the same thing. If you meet the US demands, you can end the war. Finally, recognizing Iran's sovereignty over the Strait of Hormuz, I think there's some room for discussion there. I think there's room for negotiation. He probably won't just say, okay, the Strait of Hormuz is entirely under Iranian sovereignty and you can control it. No, Trump might say, I can't agree to that because of certain strategic considerations. I can do a 50-50 split with you, joint governance, to manage the Strait of Hormuz together. So if you're talking about total, absolute Iranian sovereignty, Trump won't agree to that either. So honestly, regarding the 5 major conditions Iran proposed, those 5 conditions, 5 points, I think about 3 of them, 2 or 3, should be more or less open to discussion. The prerequisite is that you align with America's thinking, then all of these can actually be met. They can all be met. It's not a very, very difficult thing. Honestly, it's not that hard. It's just that everyone's sticking point is that one thing, which is getting rid of nuclear weapons and not developing missiles. That's basically like pulling out the 2 fangs of the Iranian tiger. So it depends on whether Iran is willing. If not, then of course there's no way. Okay, good evening, Melissa, and hello to the staff. Hello. Let me take a look. What's this? How do you allocate? William asked. Teacher, how do you allocate? Buying in batches or taking profits in batches? Yeah, about the allocation, usually I just buy a little bit at a time, buying slowly, bit by bit, maybe just buying 10%, 10%, 10% each time. Then when I'm taking profits, it might be when it reaches a certain technical resistance level or a target point. I calculate the target points myself. At the target point, the target price point, I'll sell a portion, maybe a half or a third. Then when it goes down, I'll also buy in batches because I never know if a low point will go even lower. The low point I see today could be broken tomorrow. So what then? I can't just buy everything at once. If I do and misjudge, could I be wrong? Of course I'll be wrong sometimes. Everyone is. You can't always be right or buy at the exact bottom. It's impossible. So you must keep some portion, maybe 10 to 30% of your capital, to avoid the situation where it keeps falling. You need to average down, add to your position, or even when a good low-end entry point appears, you need to be able to make your move. So usually, every time I take profit, I'll probably do it in 3 or 4 batches. As for buying in batches, it's probably more, maybe 5, 6, or even over 10 times, buying slowly. When there's a good entry point, I buy a little, buy a little, buy a little. That's generally how I do it. All right, here's the key point. Buying in small increments. Some people might say, teacher, if I only buy a little bit and the price skyrockets tomorrow, hitting the limit up, won't I have bought too little? Well, yes, it would be too little, but so what? I'm still making a profit. It's just a matter of how much. In other words, if I buy very little today and it hits the limit up tomorrow, do I miss out on potential gains? Yes, I do. But on the flip side, from a risk management perspective, what if it hits the limit down tomorrow? What if it hits the limit down 3 days in a row? Then I'd be fine, right? I'd be okay because I only bought a tiny bit. So it's all relative. It's not like gambling where it's all or nothing, win big or lose big. It's about individual risk control. Edison mentioned that in Mahjong, some play for small stakes while others play for thousands. It's personal. Personally, I prefer taking profits and buying in stages, and then gradually building my position. It's the same with Mahjong. I think small bets are fun, but big ones are harmful. You have to set a limit for yourself, a budget for what you can afford to lose. For example, when friends and family get together for Chinese New Year, we usually play a few rounds of Mahjong. When we play, we usually use poker chips, maybe worth about $1,000. Once you've played through that 1,000 and lost it, you're basically done. That's it. You just play with that 1,000 every New Year. If you lose 1,000, and that's the most you'll lose. And if you win, you could win 1,000 or more. It varies. So we usually set a stop loss, a limit on our chips. That's the idea. I think playing small is fine, but never bet the farm. So that's a bit more on the 5 conditions regarding Iran. Also, he mentioned that if negotiations don't go well, Iran might even open a new front in the Bab el-Mandeb Strait. We actually looked at a map of the Bab el-Mandeb a couple of days ago, so let's do a quick review. In the top right, you have the Persian Gulf, which goes through the Strait of Hormuz into the Gulf of Oman. 20% of the world's crude oil exports pass through here, from the Middle East through the Persian Gulf. It goes through the Strait of Hormuz, then to the Gulf of Oman, the Arabian Sea, and on to India and Africa. So this area controls 20% of global oil transport. Now, where's the other part, the Bab el-Mandeb? It's in the bottom left. The Bab el-Mandeb is right here in the bottom left, where you go from the Red Sea through Yemen's Bab el-Mandeb Strait and out into the Gulf of Aden. Now, regarding this, if Iran says, if the US tries to attack Harg Island and take it over, Iran might not rule out seizing control of the Bab el-Mandeb. Why? Because the Houthi forces in Yemen are very close allies with Iran. And don't forget, when Israel and Hamas were at war, and Israel was striking Hamas, Syria, and Lebanon, at that time, the Red Sea situation was already unfolding. I'm sure you all remember the Red Sea crisis, where the Houthi forces threatened to attack tankers, cargo ships, and merchant vessels. That's the Red Sea crisis, right there with the Houthis. And now they're saying if you keep messing around, we'll even take the Red Sea. During this crisis, the Bab el-Mandeb Strait in Yemen will also see a new front opening up. If both the Strait of Hormuz and the Bab el-Mandeb Strait are at war, wow, that'll be huge. I'm telling you, oil prices will skyrocket. They'll skyrocket and won't come down, which will be a real problem. It'll be a real mess. This should be by the end of the year. Trump won't even need to run if this really keeps going and turns into a scorched earth war. The entire Middle East crude oil and natural gas will be completely devastated. How can you even run? You really can't. So at that point, you'll just have to hold on to your cash and wait until the war is over. It'll really be a case of cash is king, no matter how much you have. All right, so the price of New York crude oil is still holding above the 20-day moving average. It's up 3.16% today, and we're still just watching how the geopolitical risks evolve. Now, as for the economic data, as I mentioned, it's just turned 8:30. Let's first see how the initial jobless claims numbers look. Okay, the weekly U.S. initial jobless claims just came out at 210,000. That's in line with expectations, just slightly higher than the previous figure, so it's not a big deal. Continuing claims are at 1.819 million, which is pretty good, lower than expected and lower than the previous figure of nearly 1.86 million. So the number of people continuing to receive unemployment benefits has dropped to 1.82 million. That's not bad. It shows the job market isn't exactly collapsing or in a total freefall, and the economy hasn't slipped into a recession. Now, will this have a big impact on the U.S. stock market tonight? I think it's okay, probably a neutral outlook. It's just that initial claims met expectations while continuing claims were lower. So if you're wondering if the Fed will rush to cut interest rates, you don't even need to look. The Fed isn't in a hurry to cut rates right now. They don't even need to look at the job market anymore. They're just focused on inflation. If inflation doesn't come down and the US-Iran conflict doesn't de-escalate, the Fed won't even consider cutting rates. That's all they're looking at. Okay, good evening, Amy. Good evening. Yeah, staying alive is more important than anything else. All right, and Jeffrey asked, if it takes off and doesn't look back, would you still chase it? If it takes off, would you chase it? It depends. I'd chase it depending on the situation. Sometimes I do, sometimes I don't. Sometimes I try my best to hold back. I'll try to wait until maybe the 60-minute or 4-hour chart shows a very short-term pullback. If there's a good entry point, I might chase it then. But based on my past experience, and I don't know how you all do it, but based on my experience, in my experience, whenever I can't help myself, like when I realize I missed out and it's suddenly surging, whenever it's surging and I can't resist buying, I usually end up being that typical retail investor. Usually that stock or whatever it is that I couldn't resist chasing during the session. I usually end up getting stuck in the short term. It happens every single time. Whenever I can't resist buying, whenever I can't resist chasing, if you're chasing it, well, that's me anyway. I don't know if you guys are like that too, but that's how it is for me. It's a painful lesson. Whenever I chase instead of waiting, not building a position slowly, whenever I chase and can't help myself, I get stuck. Ugh, every single time. So this is just a reminder to myself, a reminder to just remember this. It's better to miss out than to make a mistake. Better to miss out than to make a mistake. If you miss a market trend, there's always another train. There's always another train, so don't worry about missing it. There's always another stock, always plenty of stocks. If you can't buy WinBond, there's Nanya Technology. If you can't buy Nanya, you can still buy Transcend or A-Data, right? If you can't buy A-Data, you can't buy Micron. Then there might be others like SK Hynix or Samsung to buy. There are many options, many companies, and there's always another train. But if the train is already left and you try to force your way on or try to chase it, you might accidentally fall off or get badly bruised. It's a real hassle, so it's better to miss out than to make a mistake. Write it down, stay safe, and you'll maintain your gains. You'll maintain your gains. All right, if you chase it today, you'll get stuck. So I always try not to chase. Even if it surges, I won't chase. Resist the urge to chase. Resist it, and you've basically won. If you can resist chasing, you're already ahead of half the people. Resist chasing, and you've beaten half of all investors. Maybe even 90%. 90% of retail investors. That's how it is. Okay, let's look at the industry side. We've been saying memory prices are rising nonstop. Micron is up, SanDisk is up, WDC, Western Digital, they're all rising nonstop, right? It's because of AI development. It's made the demand for HBM, high bandwidth memory, incredibly strong. So you can see Micron, Samsung, and SK Hynix are constantly shifting their production capacity from standard DDR4 and DDR5 consumer memory. Where are they focusing? On the HBM series, HBM3 and HBM4. Well, after that shift, other consumer niche products are facing shortages of labor and materials because no one is making them. That's why WinBond, A-Data, and Nanya Technology are all rising. It's because of this. So where is the fire spreading now? It's spreading to Intel and AMD. Why do I say that? Well, it's said that these two companies plan to raise CPU prices in April with an average increase of about 10 to 15%. Why? Because they say CPU supply will tighten in the second quarter of this year. And why is that? Because current production capacity is also being prioritized for data center products. These CPUs are specifically for data centers and AI development, so they're making fewer consumer-grade CPUs. If you're just a regular person gaming or building a PC, a typical consumer looking to buy a computer, right? Those CPUs, like the i5 or i7, 10th or 11th generation, those Intel CPUs, are slowly going out of stock and becoming scarce. And with scarcity, prices go up. They just keep rising. As a consumer or a business, you'll have to pay a higher price. Plus, shipping times are getting longer. It used to be 1 to 2 weeks to get your order, but now it's being pushed to 8 to 12 weeks. Don't you think this pattern looks familiar? It's exactly like what happened with WinBond and Nanya Technology. They're doing the same thing. They're putting all their capacity into data centers and AI, so there's no capacity left for consumer electronics. What does that mean? It means the prices for consumer CPUs are going to shoot right up. So who suffers in the end? Once again, it's us regular folks. So these price hike stories probably caused AMD and Intel to jump 7% yesterday. This pattern's identical to what happened with consumer DDR4 and DDR5. Looking at Intel, it rose 7.08 yesterday. In the short term, let's see if it can break through this upward trend line again. If it does, there's a good chance it'll hit a new recent high. The prerequisite is a breakout. If it breaks through this blue dash line, then it's possible. If it can't break through, it'll likely stay within this channel, just fluctuating up and down within it. Looking at the price in this channel, you can see on the screen where the upper and lower bounds are. It's quite clear when you look at the chart. All right, good evening, Chinmei. Wow, there's a lot of content here. I might not have time to read it all now. I'll probably take a look at what you wrote after the session. Something about 00997 and blah blah blah, all that stuff. I'll check it later. If there's time after I'm done, I'll answer then. If not, I'll get back to you on tomorrow's show. Okay, thanks, Edison. Okay, thanks, Edison. All right, that's fine. Good, you get it. As long as you understand. Okay. Now, what about AMD? AMD is like this. AMD also went up by 7%. Regarding this 7% rise, actually on yesterday's show, we mentioned that it was already starting to pull away from the annual line. The main reason it's moving away from the annual line is its entry into the Korean market. It landed orders from Upstage in Korea for 10,000 MI350 chips, which are expected to be shipped there. It's moving in to grab market share from NVIDIA. So it's still holding above the 200-day moving average. In fact, its short-term trend is a bit better than NVIDIA's. We often say AMD is like a duck paddling underwater, quietly making progress. Yesterday's 7% jump is closely tied to the CPU price hikes in April. So if you've bought AMD, just stick to one principle. As long as it doesn't drop below the 200-day moving average, there's no need to worry too much. Of course, it did cross above the quarterly moving average yesterday, but even though it crossed, don't be overly optimistic because that quarterly line is currently sloping downward. It's curving down, and what does that mean? It means there's still a need for some consolidation. So you need to watch it for a day or two to see if it can truly hold above that quarterly line. If it can't, that's normal. If it pulls back down to the 200-day moving average, you can look for a new entry point. After all, the 50-day moving average is currently sloping down and flattening out, and the 20-day monthly moving average is also flattening out. So we can say it has a solid floor below, while it'll likely fluctuate around the quarterly line above. Keep those fundamental factors in mind, like the price hike I just mentioned, because if this really takes off, and goes through the roof like memory chips did, well, I wouldn't know what to do. Honestly, that would have a huge impact on the general economy. Okay, good evening, Lynn Hyoma. Thank you, Lynn Hyoma. Everyone's doing great. Sometimes in the chat room, I see your comments and find some of them quite interesting. I usually only have time to read them one by one after the session. Basically, you guys write a lot, and it's all very interesting and makes a lot of sense. Good evening, Hacker. Hacker says they've made it a habit to buy $20,000 worth of fractional shares each time. Yeah, that works. Buying in batches through a regular savings plan. Buying funds or whatever is also a way to go. It's a good method. The stock market tests human nature. No one buys when it's down, but everyone chases it when it's up. Exactly. That's how it goes. And May mentioned wanting to short Nanya Technology today, right? You placed a short order, but it seems it couldn't be held, right? Let's see if the volume decreases. Anyway, as the locked orders thin out, it'll just drop. It'll just keep falling. Okay, let me see. Promoting subscriptions? I subscribed, but then I heard blah, 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 and got a bit worried. Oh, okay. Right, I get the gist. Now, Chen Mei. Okay, Chen Mei. Let me tell you, every day on our show, we talk a lot about these Magnificent 7 stocks, and many of these representative stocks in the US market. At this stage, we can only say that in the short term, the US stock market is undergoing a correction after a big rally. Okay, a correction after a rally, but it's not turning bearish. So because it's a correction after a rally, you should instead look for stocks that have been unfairly sold off during this time, those blue chip stocks that were hit by mistake. For example, I've always said that in the future, after the US indices have bottomed out and are slowly recovering, the Magnificent 7 will play a very important role as confidence indicators. So why do I keep talking about the Magnificent 7? Every day we have to talk about the Magnificent 7 index. Why? Because it's a very important market sector, a key group of indicator stocks. Now, the Magnificent 7 are struggling. They're underperforming, but don't be pessimistic. This poor performance is a chance for everyone to find entry points after unfair sell-offs. The Magnificent 7 were sky high. NVIDIA and TSMC had both rallied a lot. TSMC was over $300 and NVIDIA was maybe over $200. Then you have AMD and Microsoft, which even surged above $550. When they were that expensive, everyone wanted to buy and chase them. But don't you think people are funny? When prices have rallied a lot, everyone wants to buy. When they're very expensive, everyone asks if they can buy. But why is it that when these good companies' fundamentals haven't changed and they still have strong competitive moats, people don't buy them when they're cheap? Isn't that strange? My point is, you can think about the logic here. Why do we often talk about the Magnificent 7? It's because they are actually very good. Why? Because a big reason is their competitive advantage. The competitive moats that Warren Buffett looks for in stocks haven't changed for these companies. If they were changing, then of course you shouldn't buy, because it would mean their competitive edge is fading or declining. But think about this logic. If you have a delicious high-end Fuji apple today, like a Japanese Fuji apple, which is very expensive, say $400 each, it's beautiful and it tastes great. When it was $300, $400, or $500, everyone wanted to buy and eat it. Even at $600, people were still scrambling for it. But if that apple hasn't gone bad, hasn't been eaten by worms, and is still the same Fuji apple, still delicious and fragrant, but because of external factors, it suddenly drops from $600, maybe it was overhyped before, to $300 or even $200 because of oversupply or market correction. Its quality hasn't changed, but it's back to $200. Let me ask you, would you buy it? Yes, why not? The apple is still fragrant, right? It's still great. It went from $600 to $200, so why not buy it? Of course you'd buy it. You could only buy one before, but now you can buy three for $200. Why not? So my logic is that for these clearly great companies, Microsoft is great, Google is great, Apple is great, and many people drive Teslas. Amazon is also great. When they're unfairly sold off because the overall market's bad and they suddenly drop to $100 or $200, why not take advantage? I'd be thrilled. It's rare to see such cheap stocks, so why not buy? I definitely would. But the prerequisite is you need to sell first. You need to sell high first, take profits, and have extra cash or cash flow. Only then, when the market is down, can you find buying points for good company stocks that were sold off by mistake. That's how you pick up diamonds at a discount. That's how you do it. So don't chase companies that are too high. Don't chase those that have risen too much. There's no point in chasing them when they're too high, as you won't make much profit later. Instead, you should wait for them to drop and then take advantage of that to find buying points. Okay, let's look at Google. Why do I say this Google thing is aimed at Micron? Google published a paper. Let me clarify. It's just a paper. A paper is just a paper. It doesn't mean it's ready for practical application. Sometimes when we do a master, does a paper mean you can get a patent? No. A paper is just reasoning, a training exercise for writing. We find data, write the article, and get a degree. That's about it. Of course, papers have reference value, but it takes time to go from a theoretical framework to a full-scale, practical, technological application. Now, this Google paper says they've released a new technology. It claims this tech can boost AI computing power, compress memory usage by 6 times, and simultaneously increase performance by 8 times, with almost no loss in accuracy. What does this mean? It means that currently, HBM, whether from Micron, Samsung, or Hynix, is constantly in short supply because NVIDIA is buying up so much memory. Because of the shortage, prices are skyrocketing. But Google says with this new technology in their paper, they might only need 1/6 of the memory in the future, while performance increases 8-fold. Is this possible? Yes, it will definitely happen in the future. It's definitely possible, but not so soon. However, it's being developed, which is good. Now, because of this, Micron fell 3.4% yesterday. People are worried that once this technology is out, the demand for Micron's memory will drop significantly by 5/6. Wouldn't the stock price crash? Yes, but I think there will only be short-term volatility. For now, this technology isn't ready to be fully implemented. Just keep it in mind. It might happen one day. As for Micron, if you're trading it, remember that in the short term, it has dropped below the 50-day moving average over the last 2 days. Yes, it broke the 50-day moving average, so if you hold Micron or other memory stocks, be a bit more conservative. As we've said, if it breaks the 50-day average, just wait and see. If it hadn't broken it, you could buy on the dip, but since it did, you should stop and observe. Now that it's broken, watch if it can get back above the 50-day average in the next day or two. Why? Because the quarterly moving average is still trending up, which is good. If it gets back above it, the stock price will still have support, so watch the next 2 days. Can it get back up there? If it does, it might resolve these short-term concerns. Anyway, that's why Micron fell yesterday. Finally, regarding the news about SMCI, I should mention it. SMC, as we discussed, was allegedly smuggling chips to China. Today, shareholders filed a class action lawsuit. You can look into the details, but it involves allegations of securities fraud. In short, it has a lot of problems and is going downhill. Even though it suddenly rebounded 17% this week, I don't think it's even worth looking at. Just ignore it entirely. The whole trend is basically falling apart. It's broken, so just don't look at it. There are plenty of other stocks worth buying. Some with poor financial reports, fraud concerns, or questionable trends are basically not worth your time. So in the AI field, you can just set this stock aside for now. We can take another look once it cleans up its act and gets back on the right track. It'll be soon enough. Don't go chasing rebounds recklessly. Don't do it. Just try to avoid those sketchy companies. Okay, looking at the US pre-market gainers and losers, the ones up today are oil companies again. ConocoPhillips is up 1.86%, and then CF Industries. Something with fertilizer? Helium fertilizer or similar is up 1.48%. Occidental Petroleum, Phillips 66, Devon Energy, Apache, Chevron, and ExxonMobil are all up 1%. Basically, all pre-market gainers today are oil companies, while the losers are tech. So today is another pre-market session with relatively high pressure. Let's talk about it. The first loser today is AppLovin, down 4.5%. Also, SMCI is down 3.7% pre-market because it's being sued by shareholders, which is quite reasonable given the fraud concerns. SanDisk, the memory company, along with Micron Technology, is also down 3% pre-market. It's because Google said that patent might replace the demand for memory. So we see SanDisk and Micron taking a hit pre-market today. Corning, along with the Bitcoin fund Coinbase and Applied Materials, are also down quite a bit. So be careful with tech stocks today. The pressure on them is still very high. It's just been up one day and down the next. The decline hasn't stopped yet, so be a bit careful. As for the Dow, it rose 0.66% yesterday, but it still can't get back above the 200-day moving average. Since it plants, just ignore it and keep waiting. Everyone should hold on to their cash and wait for a good entry point. The Philly Semi Index rose 1.21% yesterday, which is decent. It's still relatively stable among the four major indices, but as I said, it's only relative. If the Dow, Nasdaq, and S&P keep falling, do you think the Philly Semi can really hold its ground? I don't think it necessarily can. If the Philly Semi starts to drop and can't hold, Taiwan's weighted index might not hold either. Why? Because the correlation between the Taiwan stock market and the Philly Semi is as high as 60 to 70%. It follows the Philly Semi. So while the Philly Semi is stuck there, the Taiwan market is still being supported by big players. If the Philly Semi suddenly crashes, I don't think many semiconductor and tech stocks in Taiwan can hold on. The Taiwan market can't completely decouple and go its own way from other countries. It's very difficult, truly. So everyone keep an eye on the Philly Semi Index. Now, the Magnificent Seven are still very weak. Their monthly and quarterly moving averages are falling, and they've broken below the 200-day average. So we just have to wait for them to stop falling and stabilize. Once they do, we can start looking for those diamond stocks that were unfairly sold off. So wait on the Magnificent Seven. They're still in a correction phase. But don't be too pessimistic and think the US or Taiwan markets have turned completely bearish. As for geopolitical risks, we'll wait for the dust to settle and track the progress daily. Also, keep the credit crisis and those credit cockroaches in mind. Once everything settles and gets back on track, we'll gradually start picking up some good stocks again. We'll keep tracking this for you. And before that day actually arrives, remember to hold on to more cash. Wait and see. And just keep tuning in to Quanny Goodnight every day. All right, that's all for today's Quinny Goodnight, bringing you first-hand news before the U.S. market opens. Remember to like, subscribe, and share before you go. Finally, I wish you all successful trading. We'll see you tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.